Everyone, Paul here. Today I'm going to be going over kind of like my last video where I focus on weekly. I've covered it for Forex. I think I've covered it for crypto. But today I just want to go over the strategy for doing trades based off of, you know, the kind of the setup I have. Now, if you want to do this strategy, you need the Ghost Market Pro indicator, and it's a paid indicator. I use it for my trades. I look at the data, especially with the cloud, and it works really well, at least in my opinion. If you guys want to get it, that's up to you. It's part of the strategy, but I'm not affiliated with them. I just think that their indicators are pretty good. There's nobody else on YouTube talking about them but me, as far as I know. But so these indicators are very useful in my opinion. So not a lot of people know about these indicators. So unless you're the actual developer of these indicators, I'm the only one talking about them. But I want to kind of use their indicators in kind of a setup strategy that I've been using to where I trade on the weekly. And so the advantage and disadvantage of trading on the weekly is, no matter what you're doing, you have to set it at a kind of a, if you're doing normal trading, you try to set it at a small number, because if you're doing it on the weekly, you're going to be going to those ups and downs. But this video is focused on two methods with the stock market. It's basically finding a stock that's, that you see in the charts that are going to go up. And it's also going to be, you can also use this method for doing options. So today I'm going to be going over the setup again, and then I'm going to be going over certain stocks and what I look for in the weekly to get kind of results with using this indicator strategy. Okay, so if you guys want to set this strategy up yourself, there's one paid indicator, it's the Ghost Market Pro. I'm going to get into that. But I use an indicator called the consolidation zone. And we're going to go here. If you go to favorites, we'll actually just go and type in consolidation zone by Lonesome here. And then you're going to need the Ghost Market Pro cloud. And now I turned off the cloud. Turn back on the cloud. So you see the Ghost Market Pro cloud is what you're going to need. So that's a paid indicator. Get it if you want. It's very helpful in my opinion. And then I also have stochastic. So the only thing that's paid here is the cloud. So if you guys want to get it, go and get it. But say the setup is real simple. When there is a sign, and we're doing this on the weekly to see, to get into those good moments. Now what you want to look for is, you want to look for the cloud. When the cloud starts weakening, when you start seeing it weakening and it goes from down to up, what you want to look for, and you'll know that it's in the right moment, because if it's going up, there will be a yellow candle that is printed. If it starts going down, it is going to print a white candle. And these are on the weekly. So what you want to look for is a trend of, down to up or up to down. And if it's going up, you want to make sure, you want to look for a green dot that is close to when it's going up. And if it's going down, you want to make sure that it's going down. You want to see a red dot with it going down, and you want to see a green dot with it going up. That's what you look for. Now these are weekly candles. So if you're doing options for the strategy to work for a longer period of time, you probably have to buy your contracts for 30 days out. If not, then you'll have to ride it for that week. There may not be enough time for that to happen. The whole purpose of doing this on a weekly is you wait it out 2, 3, 4 weeks. This is not a short trade. These are long trades here. So let's just use a couple examples here with the S&P 500 here. So what we can see right here is it printed out a yellow candle, which it signaled that it's starting to go up on the weekly. So if we look at the cloud here, if we look at the cloud, we see that there's a green dot, and we also see that the cloud printed from down to up. So what you want to look for before entering your trade is it needs to go from down to up, and you need to see a green dot. So if you did ride this out, and this is SPY here. Now you want to double check everything with your stochastic as well, and make sure it's going in the same direction on the weekly. So since we're going up here, we want to make sure the blue line is across in the other line. So if you bought a contract here for 1 week, it went up $14. So we could check and see how much a $14 difference in price is. So real quickly here, we want to see what a $14 difference in price is. Let's just get close to the dot here. You want to get as close to this dot as possible if we were doing a trade. Okay, so it's about $14. So what we would look for really is $4.60. So we're looking for $4.60 here. Okay, well, it's not going to register, but we're looking at maybe a little over $1,000. So that trade right there for waiting it out, this trade right here, from here to here, is about $1,000 trading SPY. So if you actually bought your contracts to be longer, you would make more. Now you don't necessarily have to do options contracts with this. You can just ride it out. You can look now with this other strategy. You can only focus when it's going up. You're not doing options contracts. You're just focusing on when the signal is for that stock going up. And we're going to look at a couple other stocks to see how this would benefit. But if you just took this, you bought some SPY and you wrote it out for, now look at your stochastic right here. I would personally get out right here if I were riding it, because you see that in the stochastic, you see that it's about to cross the line there. So I would probably have ridden that entire thing out. That's 21 days. This is not buying, you know, if you bought the option contracts, you would have to buy your contracts for 21 days. If you just wanted to ride it by buying the stock and selling, you'd be looking at about a 6% in 21 days. So that's how you do it. And we'll look at a couple of examples. Now, if you want to ride it without an options contract, you just look for the candle to get yellow. You have to make sure that it's going from down to up. You have to see the change in the cloud. And you also have to look at your stochastic. So we could ride this entire thing out. This is a long wait. These are weekly candles. So if you rode it from here to the top up there, this is a 13% increase in 112 days. So you could do that, or you could do a contract. You could buy an option contract, but you'll have to wait it out. Now I'm going to show you what I'm personally doing, and this is actually going to make me a little bit more. Is I'm focusing on stocks. Now I do SPY. You know, I'll do SPY if I want to make a little bit of profit. But the ones that I focus on as far as trading is MicroStrategy. I'll focus on MicroStrategy because it's connected to Bitcoin. It's a stock that's connected to Bitcoin. And what is Bitcoin going to be doing in the next couple of months? Where do you think it's going to be going? So what do you think is going to be happening to the MicroStrategy price after the Bitcoin halving? It's going to go up. So you could really find a lot of good moments with MicroStrategy coming up. What you want to look for is you want to look for it going down to up, down to up. Now we are on the weekly. And you want to look for a yellow candle. A yellow candle. Now you'll only see this yellow candle if you have the Ghost Market Pro. You're not going to see this yellow candle if you don't have it. It's part of Ghost Market Pro. But you see the yellow candle. You see that it's going from down to up. You see the green dot. So this is a good indication of just holding this trade. Now, I'm not going to go into... I've made videos on MicroStrategy, but their contracts are really expensive because it's connected to Bitcoin. If you want to do an in-the-money contract with MicroStrategy, you would need about 10 grand, at least, for you to do a contract. They're very, very expensive, and I can almost imagine when the halving happens, the contracts are probably going to get more expensive. But what you could actually do is you can benefit on all the moments that it's going up. You could just buy some MicroStrategy every time it shifts from down to up, down to up. So if you came in right here and you just bought some MicroStrategy and you rode this out, now look at your stochastic right here. What I personally would do is get out when the stochastic is crossing past with the other line. That's personally what I would do. But what you see right here, by just riding it up, you got a 50%. You got a 50% on your money by just riding it out on the weekly. The disadvantage to doing this though is when you're doing it on the weekly, you have to wait a long time, and you can get impatient doing this. The longer you wait, the more gains you could possibly make in the future. Now you see right here that if I rode this out, now I got into this trade because the candle turned yellow. It went from down to up in the cloud. You saw the green dot that gave you another signal, and you also see it in the stochastic. The stochastic showed you when to get out. So this is a 50%. Now, if you were to manage and you were to trade MicroStrategy every time it went up, let's say your average for the next year would be 50%, and you just look for all the times that it's going up. I have a goal here of trying to get to 50%. I think it can get to 50% during the bull run, which is this year. So I made a little spreadsheet here. If you were to focus on getting a 50%, it's taken just a small amount of money, and to make 50% of that, and to do that, if you got 50% by trading MicroStrategy or another similar stock that can have that kind of volume, but let's say you started with 1,000 and you got 50% of that, you would make 500. You then would have 1,500, and if you got 50% of that, you would have 750, and then it would compound, and you would only need to do this. You would only need to do this 20 times to be a millionaire. If you can get 50% in trades. If you can get 50% in trades and you do it 20 times, that can compound into $1 million in 20 trades. Now, these 20 trades will take a while, but anyway, I'm getting off the topic there, but if you keep following this strategy here, and you look for the yellow candle here, you see it shift from down to up. You see the green dot that symbolizes the green dot there. So if we rode this one out from here to here, and this is kind of tricky because I personally would get out when I see the stochastic running into each other, so I would end the trade right about here. This wouldn't be a very long one, but this is still 29%. Not bad. And let's just look at another one, and then I want to go into another stock. Let's see. We got this one now. The consolidation zone helps you find the moments where it's just kind of bouncing. So make sure you have consolidation zone. You don't really want to do any trades when it's consolidating, but I'll do this one. So you can't tell, but I think that's yellow. Can't tell. Let me zoom in. Is that yellow? Yeah, that's yellow. So we wrote this out. We see that you see the yellow candle from the Ghost Market Pro indicator here. I personally wouldn't take this trade because look, if you look at the cloud, it's down, but it's not have that little break here. I kind of look for a break in between down to up, and you don't see that. You see that right here is what I'm talking about, but you don't see it right here. You want to look for it going from down to up or up to down. So I'll take this other one as an example. Well, this is going down. Let's find one that's going up. We could do the short one right here. Okay, so we see down to up. Right here, we see the green dot, yellow candle. And we ride this out. Look at the stochastic. It's hitting, so this isn't a long trade. This is still 15%. So you can still find some pretty good percentage on your trade. So let's look at a couple other stocks. Let's just do something like NVIDIA. Okay, so let's look at NVIDIA real quick. Now, you could do two different ways, like I said in this video. You could do options contracts, or you could just ride it when it goes up. Okay, so for NVIDIA, it's basically the same thing. You look for a yellow candle. Now, if you want to ride this up, let's see, NVIDIA. Now, if you want to ride this up, make sure you stay cautious of your bounces here in the consolidation zone. Let's find something that's, not consolidating here. Remember, this is all on the weekly. And we'll go here. We see the yellow candle printed. Now, what I'm kind of wary of is there is a green dot that is, it's above here at the top. You really want to steer clear of when the green dot is way here at the top, because usually this means it's going to start going down. You don't want to see your green dot way up here. You want to see it more closer to the cloud. So I'm not personally going to take that trade, even though it looks like a good one. What I would have got into is right here at the bottom. We see the yellow candle, and we see it go from down to up. We see the green dot right here. So this gives me a better signal, personally. And if you rode this out, now you can either do options contracts for a month or however long you want to buy it. But if not, you're going to have to trade this every time it goes up. Now this is a week. And from the looks of things, it looks to get kind of like the same results as MicroStrategy. So if you want to find your 50% to your 100%, this is a good way to do it. Look at it on the weekly. Look at your stochastic right here. So you see that goes from down to up right here. You see the green dot, and if you look at your stochastic, when it starts touching the other line, that's personally when I would get out. That's just me. But this is a 32%. So you can see that doing this on the weekly has advantages and disadvantages. The only disadvantage here is when you're doing it on the weekly, you have to wait it out. And when you're trading on the weekly, you have to stomach the ups and downs because it will be going up and down. You just have to make sure. Now this is it's mainly for Forex, but when you're doing when you're just doing a regular, when you're trading when it's going up, you really don't have to worry about the stomach. You will go down, but you just have to stomach the moments it's down. When you're doing normal trading, when you're doing options, you'll have to stomach it more. But whether you want to do options with this strategy or you want to do just regular trading, if you do regular trading, you can only focus when it's going up. My personal goal is to try to find 50%. And like you saw with the chart that I did, if you can find, like with a $600 balance, and if you could find 50% 20 times, that will compound your money into, if you saw the chart, you can see the chart. I might share my chart with you guys on below if you want to look at it. This is starting with a balance of $600 and finding 50% gains along the way. Now remember, you still got to pay taxes on this, so I'm not a financial advisor. But anyway, this is kind of like what I look for when I'm trading stocks. I kind of do both. Right now, I'm trading MicroStrategy, and I'm trying to grow it that way. And I'm trying to find my 50%. And that's going to go up with Bitcoin. And as Bitcoin goes up, MicroStrategy is going to go up too. So you could find a lot of stocks where you get 50%, but mostly right now, those are all the things that are connected to Bitcoin. You could find, you could do it with the S&P 500. You won't be finding 50% for weekly, but you will find some good percentages. But anyway, none of this is financial advice. It's all for entertainment purposes only. I'm not responsible for any profit or loss for the indicators or for the information in this video. This information is just what I'm observing and what I see with my own results. But anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.